Hello and welcome to Global Business Insights, where I bring insights on the main business stories, global markets, and what you need to know on latest macroeconomic data releases. In today's evening episode, we will look at business stories, including a recent Deloitte survey, which says only 17% of executives surveyed trust artificial intelligence. We also got some trade data from Germany, which we'll discuss, and also look at why Bitcoin apparently is losing steam as the initial hype over approval of the Bitcoin ETF fades. Geopolitics seems to be outweighing demand concerns for crude oil markets as Brent crude goes over $80 again. And in Nigeria, we will discuss Nigeria's demand for a review of the global tax system at the opening of a summit in Uganda, where President Tinubu is represented by Minister of Budget and Economic Planning, Senator Atiku Bagudu. And we'll wrap up with the latest on stock markets. U.S. stocks opened in the green today as investors built on the previous session's momentum. The S&P 500 was up 0.3%, up to a fresh all-time high. The Dow Jones Industrial Average also hit a record, gaining 100 points or 0.3% on open. The technology-heavy Nasdaq Composite advanced 0.6%, with the tech stocks still apparently soaring, helped by the positive AI narrative. This week, the Federal Reserve Bank is in a quiet period ahead of its monetary policy decision next week. But still, quarter four earnings and economic indicators like fourth quarter U.S. gross domestic product data and personal consumption expenditure, PCE, that's the index for inflation that is preferred by the Fed, can still spring surprises. Technology stocks are growth stocks and much more sensitive to interest rate and inflation projections, and traders are now pricing in a roughly 4 to 6% chance of a Fed rate cut in March, and that percentage continues to fall and is a steep decrease from almost 81% a week earlier. And still on the AI narrative, which has helped technology stocks, in a recent survey by Deloitte on the promise of generative AI, it found out that 62% of 1,000 or so surveyed leaders said they are excited about AI, but only 17% trust the new applications and 30% are still unsure of what it will deliver. While 48% say it will transform their business, this will not be until after a year to 3 years, and only 14 to 17% see earlier benefits. 56% of leaders surveyed expect it will improve their efficiency, and 35% expect it could help to reduce costs. Also, if you look at areas of current use, they are mainly in cybersecurity, sales and marketing, and customer service. Over 50% of those surveyed also expect it will increase economic inequality and will further centralize economic power in the global economy. Deutsche Bank analysts also in their own recent report also say the frothy chatter around artificial intelligence is beginning to dissipate as companies turn their focus to actual uses rather than, quote, pie in the sky, unquote, applications. For all new technology, it's always a mix of genius, hype, and snake oil. I imagine things will get much clearer for AI in 2024. Despite the potential and promises, most investors may need to be more patient to reap the expected rewards from AI, according to this Deloitte survey. And if you have ever sat down with a senior IT executive with a large budget, they don't spend for excitement, and trust is as important as promise of value. So I tend to agree, like the survey suggests, that 2025 could be more the takeoff year for artificial intelligence. We did get some trade data in today from Germany. The December German exports to non-EU countries fell to their lowest level since COVID. That was after a sharp drop in demand from China. China exports outside the EU in December fell 4% from the previous month and 1.7% from a year ago. This further reinforces the likelihood that Europe's biggest economy suffered a sharp downturn at the end of last year, especially in Q4. German shipments to China also sank by 12.7% from a year earlier, according to the Federal Statistics Office today, while exports to the US, its biggest market, also fell 9.9%. Also, Germany is starting to feel the pinch from delayed shipments via the Red Sea as the German chemical sector becomes the latest industry to warn of supply disruptions that have forced some companies to curb production. Bitcoin was heading down towards under $40,000 today as cryptocurrencies generally dipped despite the broader rally. In early morning trade, we saw Bitcoin down by 3.4%. I can see that it's down 2.39% as we speak. It's about 6 p.m. GMT, 1800 GMT. Bitcoin down 2.39%. And it's a low, it's really going down. It hit a low of $40,352, closing to a lowest point of 2024. That was on Friday. Now it's $40,649. Ether and smaller tokens and like Dogecoin were also down. After the ETF listing, which may have resulted in more pricing in than was required, what I think is happening is that new interest is not enough to offset profit taking by speculative traders who just came into profit from the much hyped announcement. Bitcoin remains a highly volatile asset, and playing in that space requires obviously vigilance, knowing when to go in and out. And I think it's still far from being seen as a stable long-term value asset. Looking at oil prices, earlier in the day we saw Brent crude with a weak start in the morning, but later crude oil prices apparently have spiked up, now up 2.1%, $80.21 for Brent crude. Analysts still see the somewhat subdued prices as reflecting the current weak sentiment in the crude oil market. They really should have been much, much higher than that. If you take off the premium that is on that $80, prices really should be more like $75. But having said that, production at Libya's Sharara oil field resumed on Sunday. That's the state oil company, NOC. They said after protesters ended their sit-in that had halted output since early January, we now have production back. On Wednesday, we will get the latest weekly petroleum status report from the US. Last week, petroleum stocks, that's commercial inventory, dropped by 2.5 million barrels per day. From a year ago, total crude oil inventory dropped by 4.2%, down 34.1 million barrels. Domestic production in the US, that was last week, was at 13.3 million barrels per day, up 8.7% from a year ago. This is as the US continues to produce at a record pace, neutralizing any attempt by OPEC Plus to tighten the market. Still on oil, motor fuels distributor Sonoco said it has board approval to buy oil and gas transportation service New Star Energy in an all-stock deal valued at about $7.3 billion. New Star's common shareholders will receive 0.4 Sonoco shares for each New Star common unit, implying a 31.9% premium to last close. Synergies from the vertical integration could be as much as $150 million by the third year after closing of the deal in the second quarter of 2024. As margins are under pressure in the downstream, given inflation of costs and weak oil prices, one can expect more of these types of consolidation to get improved efficiencies. Shares of Sonoco as we speak are down 4.58%, while New Star Energy's shares are up 18.86%. In Nigeria, President Bola Tinubu, at the opening of the third South Summit of the Group of 77 and China in Uganda yesterday, called for a review of the global taxation system to redress imbalance in the international tax regime. He was represented at the event themed Leaving No One Behind by Minister of Budget and Economic Planning, Senator Atiku Bagudu, who also stated that the way taxes work today hurts developing economies. It would be naive, in my view, to expect concessions or a design of global tax models to favor developing countries at the expense of wealthier nations, especially with fiscal pressures everywhere. Also, much more specific alternative proposals by developing economies are yet to be put on the table. In the last few years, we've seen Western nations appear to be fighting amongst themselves on how to share taxes, especially in a new digital big tech driven multinational environment where current tax models or current tax rules don't work as fairly for the very different environment we have with technology. Still, for me, for emerging economies, in my reckoning, far more is lost from poor policies, weak tax compliance, and of course massive leakages from governance lapses rather than through taxes. Give an example. Consider the case of 1MDB scandal in Malaysia, where the former Prime Minister Najib Razak, also Minister of Finance, that's a classic recipe for disaster in emerging economies. He's serving a 12-year jail sentence, expecting to soon obtain a royal pardon after investigators estimate that $4.5 billion was stolen. Most of the other accomplices remain in the system. In Nigeria, I would advise that rather than chase complex global taxation rearrangements now, a lower hanging fruit is to address governance weaknesses, leakages, and corruption with a more comprehensive and systemic approach to plug the causes of vast illicit outflows. And as we wrap up, let's close again looking at stocks. This time we see European equities closing higher, seeing most gains for technology and real estate companies, offsetting declines for utilities and energy companies. The FTSE 100 closed up 0.35%, FTSE 250 closed up 1.08%, DAX, that's the German index, closed up 0.35%, while the CAC 40, that's the French index, also closed up 0.56%. Earlier, we said Asia Pacific stocks, Japan, for example, Nikkei 225 closed up 1.62%. Hang Seng also closed this time down 2.27%. That's the Hong Kong index. The Shanghai Composite, that's Chinese index, closed also down 2.68%. So it's looking somewhat mixed in Asia, while European equities apparently in positive territory. Looking at U.S. stocks, it's about 6:15 p.m. GMT. Nasdaq is up 0.32%. It's positive. Dow 30 also up 0.33%. S&P 500 is up 0.26%. Tech stocks doing quite strongly. Nvidia up 0.64%. Microsoft is down 0.54%. Apple up 1.27%, while Google is also up 0.41%. Amazon down 0.35%. Not as strong as we saw on Friday, but not doing badly. But so far, of course, it's a new record high again, as we saw the Dow, S&P 500, and Nasdaq all gaining. But the big question, of course, is how sustainable is this rally? We'll have to see. But that's it from Global Business Insights today. This is Bode Oshosami. Bye-bye.